So we come in today to brand new meme stock data when it comes to how much investors have lost over 1 week trading both AMC and GameStop. You can see Business Insider talking about nearly $1 billion in just 5 days on the loss side. We're going to talk all about how this happens and why it happens if you're trading GameStop and AMC. Let's bring in Neil and Sean and have a discussion here, guys, about this number, because here we go again. $1 billion in losses, according to Ortex data that was out last night, when it comes to both AMC and GameStop on the short side again.
Yeah, I mean, here we go. It's the same old story. Now, there's been multiple, we call them short squeezes, in both AMC and GameStop. But the latest round is a little bit different from the previous in terms of volatility. And people are asking themselves, well, I mean, how can there be such massive losses when previous squeezes, whether it was 4 to 26 back in January, and then another push that got you from about $7 into 14, 15. This time, we're really only talking about, a $12 to $15 price move in the span of 3 or 4 days. So it doesn't seem like a heck of a lot, like that 25%. But it just goes to show, as things have calmed down, it sometimes emboldens some of those short sellers. And then even a smaller squeeze, Sean, can lead to potentially bigger losses. You're not talking about 100% short, a short float like you had in GameStop. It's more in that 20% range in both those names with AMC. But momentum can be an absolute killer. When the shorts double down, they can get burned.
Exactly. And remember, I'll look at GameStop chart here. Look, the thing about it is GameStop, although we know what happened with Wall Street bets, all of that, you could see that. I mean, this got up to $500. So we've seen Wall Street bets come into action here. But the thing is are the reopen plays actually going to be for real? Or is this going to be something that GameStop is just going to, where's the true value? And I think that that's part of the problem here. When you look at GameStop, it looked like right here that we were trying to break back down below 150, hit this 140 area, and then maybe make a march down to these kind of lows. I don't know if we're going to ever see $50 again, but I'm guessing that was some of the bet, right? Was that traders right now thinking about GameStop, maybe heading back to the bottom side here on some of these reopen plays right now. We've gotten a lot of the data. We know the mask data, so on and so forth. But guess what? A lot of these shorts are about to get blown out even more. Although GameStop today down 1.43%, we're right at that 50-period moving average, and we're right at this tipping point of basically like 180. You can zoom in here, go to some of these levels. If we break here, I'm guessing that 200 has some kind of a level spike to it, peg to it, where that if we get near 200, then these shorts are going to get blown out even more, and we could retest back 250, even back up to 300. So I don't think the move is over here in GameStop, and that $1 billion doesn't seem like that much. There's more to go here, but Brendan, as you know, that doesn't mean that Wall Street always loses.
No, and I think it's important, guys, that we talk a little bit about, like, what is this? So we see that number, okay, so $930 million lost on the short side over that period, 5 trading sessions, in fact. Let's talk a little bit about how that happens. And it's simply you're taking the equation of how much of the float is short currently, and then just looking at the price movement, right? So they're X amount of dollars out of the money potentially, and right, coming up with that number. But what does this mean going forward if we continue to see these stop outs, kind of ramping up even further?
The question becomes how much of those shorts are actually covering, right? And it's important to remember this, because on the way up in both GameStop and AMC, the first couple of times they squeezed, what you ended up having happen was and look, you had to push down from 12, and I'll show you this chart a little bit further out here. And then as it got to back above 10, you talk about those last 5 sessions, this is a volume spike in the last 4. So it all sort of started when for AMC, when it broke out past this 10 level, shorts that would have been digging into the downside, start getting those covers. It breaks up 20% to 12 even, and then another move up about 10 to 15% to 13.5. What usually happens, what happened the last few times was you do have some shorts get stopped out, and then other shorts say, well, I still think it's a good value. They sort of come back to the inside. So it's not a guarantee that as the stock price increases, and it got as high as 15 in AMC today, it's actually still holding up 1% despite this pullback. Some new shorts do come in. And some of those that if new firms were saying, yeah, I'm going to short this in the pre-market off at the open, they're sitting there in the money. So just because it's continuing to push to the upside isn't an absolute guarantee that you're going to get another monster squeeze on AMC or even on a GameStop, because a firm jumped in here and on good volume is shorting in the 14.50 to 15 range. They're not out of the money today. Now, certainly some of those would have got stopped out, and there's probably some that are still underwater on AMC. Could have been from like 9.50 or that 10 area, maybe even 11 or 11.50. But it's not all of that 18% or 21% in the two names that's going to continuously hold and just kind of YOLO it to the short side, right? Like, margin calls happen, covers do happen, but new shorts do have the ability to come in, both on a long-term time frame and in regards to day trades. And I think that's why you see pullbacks like today after what was, and on our show, I was shorting 14.25, 14.50 because of a 3-day high. It gaps up and comes right back into some of these levels. And I think some new shorts have come into AMC in particular.
I mean, this could get, and that's why I was saying this could get a lot nastier because of possible new shorts coming in and then maybe getting blown out. This is a 50-period moving average. I talked about this just a couple minutes ago. Look how it's kind of riding this, right? We did get a little low there back in February. I mean, what a great bottom that was, $41. And then since we sort of cracked this 50-period, it's just like resisting it this whole way away. And then now we break it to the downside. This is where I believe there's been a lot of shorts put on, and that's why you get that acceleration to the upside. But note down here, I opened up the volume, and there's not that much. I know it's different on AMC, but GameStop, there's not that much volume. So I believe, Brendan, that if they decide, if traders and Wall Street Bets and that whole sort of crowd decides now to move some of the money that maybe they've made on AMC by going long, remember, a lot of traders buy call options rather than put options because we have that whole rocket mentality, right? We want this thing to go up. We don't celebrate it going down. We celebrate it going up. So I'm wondering if more and more shorts here from Wall Street may get involved because they're noticing this 50-period moving average. They may start putting on some shorts. And then, like I said, I don't know where margin calls start to happen, but 250, 300, GameStop could go again. And we'll revisit this, but I like GameStop to possibly break even above this 180. I think that easily happens. And then you're watching out for this high right here, 190. So a 190 break, I believe, and this is going to be a big call. I think that gets us to 250, Brendan.
Yeah, now it's important to have an understanding of what to do as we come in on a daily basis to how to approach these types of trades. Sean just gave you an idea there. Real quick to wrap things up, guys, do we come in on a daily basis, I guess, leaning on the long side because of this data that we now know that these short percents are increasing again? Or do we still have to kind of sit down and trade what we see?
You do always have to trade what you see. Now, for me on AMC, because it had that struggle through 14.25, I mean, it already made like a 40% move from that 10 break. That's the only reason I was leaning into that short trade when it got there. And like Sean said, the difference between the two has been the ever-increasing volume throughout this move. And it's starting to show some signs of cracking down a little bit, not too much here. We're still holding up on the volume end in AMC. You'll probably note that. And remember, that means there's been ample liquidity. Anyone caught in a short, there's been no trouble getting out of the trade, right? It's not as if there hasn't been liquidity. And that's the other side of a short squeeze. When there's plenty of liquidity, it's a little bit easier for that new short entrant to come in. So because the volume's so high, I don't expect that percentage to budge at all on AMC. If anything, there's at least a decent chance that it could be increasing as the stock price goes higher.
It's also approaching summertime where volumes will be a little bit lower on the trading side. So therefore, stocks, not that we want to throw around the word manipulation, but stocks can move based on less than nothing because the volumes are low and a lot of the big boys are off to the Hamptons, Brendo.
Yeah, 8 days in a row now for both AMC and GameStop, guys. The shorts are getting squeezed once again. Where will it end? Come back and find out. Join us live every single day, guys. Take a second, hit the like and subscribe as well before you move on with your day. Here's Valeria.
Hey guys, thank you for this great information. Dear viewers, please subscribe to this channel to see more great videos.